So in order to really dive into what infinite banking can do for you, we need to first understand what infinite banking is. Infinite banking is just a fancy word that describes one utilizing a cash value life insurance policy while they are alive for the tax-free income benefits or for investment purposes. The thing that a cash value life insurance policy gives you that a term insurance policy won't give you is a savings account. That is where the infinite banking comes into play. You're using the life insurance company as your bank instead of using JP Morgan Chase, Wells Fargo, BB&T as your bank. So you are applying for a life insurance policy, getting approved for that policy, and maximizing the savings account via several key IRS tax codes, which allow you to utilize that policy as an investment vehicle as long as you meet the death benefit and funding requirements. I'm going to really briefly go through each of these types of life insurance policies, and I'm going to explain a few of the key features of the individual policy. And then I'm going to wrap up by telling you which of the policy types are best suited for the infinite banking process. Your variable universal life insurance policy, your universal life policy, your index universal life policy, and finally your whole life policy. Now, these are all policy types with savings accounts, which means that they could all be used for the infinite banking process. But not all of the policies are going to be suitable for infinite banking, because one of the key benefits of infinite banking is you have guarantees on your principal. Your money is safe from market risk. Secondly, you have the ability to fund that policy and have flexibility to design that policy as an investment account. If you could lose money in the policy, then it's not going to be suitable for infinite banking, because again, the key benefit of having a bank account, for example, is knowing that when you go to the bank and need money out of your bank account, you're going to be able to get the money out of the bank account. All of these policies have a savings account, but for example, the variable universal life insurance policy type, that savings account is linked to the stock market, which means what? The savings can go up, it can go down, you could lose money, meaning you could end up with less money in that savings account than you actually put into that account. So although the variable universal life policy has a savings account, we're not going to want to use that for infinite banking because of the lack of guarantees that we have on that savings. Also, VULs have a lot of fees, which over time tend to cannibalize the value in that savings account if you don't select the correct sub accounts. So again, two things there. VULs have a lot of fees and there's no guarantee on the savings, which makes the VUL a less than ideal solution for infinite banking. The next policy type you have is what's called a universal life policy. Universal life policies have a savings account, but the savings account is not structured for growth. The savings account is primarily to support the death benefit. Well, the UL policy type is great in the sense that it does provide greater guarantees on the death benefit. If you're looking for coverage for a longer guarantee period, the universal life policy is going to be great. It also gives you more flexibility than, for example, the whole life policy type, which we're about to talk about. But again, the universal life policy is not going to be ideal for the infinite banking due to the fact that the savings account is used to primarily support the death benefit of the policy. Whole life policies are very popular in context of infinite banking because of the fact that you have guarantees on the amount that you earn on the savings account. And if you have a participating whole life policy, that means that the growth that you have on your savings account is based on dividends that are paid to you by the life insurance company. For example, if the life insurance company makes $5 billion, they take that $5 billion and they divide it amongst all of their policyholders. So you are participating in the profitability of that life insurance company. That is where the dividend distribution aspect comes into play. Whole life policies are not without their drawbacks. With a whole life policy, while you do have stronger guarantees on the cash value growth, you also have less flexibility. For example, when I'm working with clients, they might want to change their premium 5 years into their plan. Well, with a whole life policy, you might not be able to change your premium. Yes, you have the guarantees, but I always say to clients, you pay for your guarantees. Now, for most of my clients, we're going to be looking at the index universal life because we have the maximum flexibility with the premium. We're able to select different savings account options. With the index universal life, we get to choose which savings account we have to grow the money that we've built up in that savings account. And some companies can offer you 5 options, other companies can offer you 15 options. Again, maximum flexibility there. And also with your index universal life policy, you're going to have critical and or chronic illness included at no additional cost. Why is critical and chronic illness important, Jerry? Well, cousin, auntie, uncle, the reason why it is important is because in our community, what is the thing that we deal with a lot of times in the Black community? High blood pressure, diabetes. These are the things that get worse over time. So if you are looking to establish a policy for investment purposes, meaning you want a policy that you can use while you're alive for retirement, for business purposes. Maybe you're a real estate investor. You're looking at a way to utilize that policy, to leverage that policy for your real estate investments, which I'm going to teach you today to do in another video. But you want to do all of those things. But think about this. If you want to use your policy as a bank, but you fall out from a heart attack, what happens to your investment plans? What happens to your retirement plan? So it's important to make sure that we're including some type of living benefit, some type of an accelerated benefit that can pay us out money in the event of that diabetes, of that high blood pressure taking a turn for the worse. But also, if you're like one of my clients, we set up his banking policy about 2 years ago. He contacted me and said, Jerry, I need to get another policy. And I'm like, well, yeah, that's no problem. He said to me, well, Jerry, I had a stroke. That's all fine and dandy. I'm not planning to die anytime soon. I also want to make sure I have something to pay me out of benefit if I live past that stroke, past that heart attack, past whatever those chronic conditions are, which means that we're going to want to look more closely at our index universal life policy. If you have a critical and chronic illness, those situations don't tend to improve as you get older. They tend to get worse. Now, we're not speaking that into existence. We're going to speak health and wealth into existence in Jesus' name. But it's better to have an umbrella. If the meteorologist tells you it's going to rain, have an umbrella. If you don't need the umbrella, put it in your car, keep it in your car. And that's why we're going to look at our index universal life policy as our infinite banking policy of choice. All right, family. So there you have it. I don't want to overload y'all with all this information in one video. So I have just explained to you all the different types of policies which could be used for infinite banking, and we narrowed it down to the whole life versus IUL, and we talked through some of the key differences between the whole life and IUL, and why in most cases the IUL is going to be the policy you want to use. If nothing else, you got that critical and chronic illness on there. And if you know you have certain conditions in your family, yes, infinite banking is important, but we also want to make sure that we have long-term care situations taken care of. The IUL is going to be fantastic for that. So we're going to continue down this rabbit hole. So what I'm going to do in another video, which probably is going to be linked to this video. You should see a thumbnail somewhere around this video. Watch that video because I'm going to break down all of the fees and how those fees ultimately impact the growth of the policy. All right. Thank you all again for watching this video. This is going to be helpful to somebody. Again, this is all about helping Black folks utilize their insurance policies as assets instead of thinking of them as liabilities. We're using them as assets to not only secure our financial future, but also the financial futures of our beneficiaries. Thank you all again for watching this video. This is Jerry Gordon, President and CEO of the Black Wealth Company, where Black wealth is our business.